going to talk generally before I start about what different support there is. So normally when we're talking about financial support, we're talking about grants or loans or equity. That's the three subjects that we're going to try and cover. Most people are very interested in grants, and this is an area that has changed a lot over probably the last 10 years. So if we look first at grants, how to find grants and other financial support in your area. Now, I've said there that there are now limited grants available from government for business startups. In the past, there were a lot of enterprise loans and other loans that were available for startup businesses, but having done a lot of research, it seems that these general grants, these enterprise startup grants, are no longer available as a countrywide option. So the support that is there now tends to be local based, so provided by local councils, and it's often where people they're trying to generate businesses in their areas. So the grants tend to be for specific geographical areas and otherwise for specific industries to encourage innovation. So a good place to start is the link that I show there. And I think Kotaiba will share the slides afterwards, so you'll be able to get the link. And that website that I linked to there allows you to search in different ways for what support is available in your area. So obviously, I don't know which area all of you are in. So I've given on later slides some examples, but you can look by industry type, stage of business. Are you starting now, or are you going to start, or you've been running for 2 years? Type of support, so that can be grants, but it can also be other loans and equity, and the number of employees, because a lot of the grants or other things are limited, so specifically for companies with less than 10 employees, which I assume would be applicable to most of you. As well as actual money, sort of financial support, there's also support in the form of workshops and other assistance, advice, that sort of thing, tools that may be available. So I would say a good starting point is go to that website and just search on what you're interested in. So I've had a look on the website to see what, some examples, and what I found is that in the Southeast there are quite limited grants on offer, because a lot of the grants tend to be for more deprived areas or areas where councils are trying to generate business, whereas obviously in the Southeast that's not the case. So the grants tend to be more for specific industries. I've said there's other support in the form of free workshops, help with getting other types of funding, such as loans or investments into your business. So I've given you an example there of one that came up. So this would be the Herefordshire Startup Programme. So that's available only to businesses in that area. And they offer 12 hours of free business startup advice, workshops and networking opportunities, one-to-one advice, access to workspace, and then they may also be eligible for a match-funded grant of between £500 and £3,000. So that tends to be the sort of thing that you're looking at. Small grants, sometimes matched by investment either from the business owner or some other investor, and then other things like workspace, advice, etc. So it's really just a case of looking at what is available to you. So looking here back to what I was talking about before, the types of business of support. So as well as grants, which we covered a bit, which are non-repayable but may have certain conditions attached, the other options, if grants are not available to you, are loans or investments. Now, loans will be from banks or other institutions, and these are normally repayable over a fixed term at either a fixed or variable rate of interest. In some cases, some banks and providers will ask the business owner to give a personal guarantee over the loan, and that's something that you'd have to consider carefully, because that can that can sort of go through the limited liability of a company if you're having to give a personal guarantee. So ideally, that's not something that you'd want. That's loans, and then investment is another way of getting money into your business. So that's finding someone who's interested in investing in your business, and that's also known as equity. And finally, other support such as assistance and advice. So let's have a bit more of a closer look at loans. So a startup business may be eligible for loans at a preferential rate of interest, provided it meets certain criteria. And these are the sort of loans that you'll be finding on that government website. That is definitely a recommended place to start. Beware of loans from unauthorized providers at high rates of interest. So ideally, if you're looking at a business loan, it should be a reputable provider or bank, or from that gov.co.uk website. Ideally, there should be no personal guarantee from the business owner. If you can avoid that, you're then maintaining the limited liability of the company. And finally, you need to consider the length of the loan as well as the rate of interest. And if the interest rate is not fixed, consider the potential increase, consider the effect of any potential increases in interest, especially in the current environment where interest rates are increasing. Because you need to make sure that your business can afford that loan if interest rates increase, if it's variable. Ideally, it would be fixed, and then you know what you're paying. Okay, so what are the implications of loans and equity? Obviously, grants, there's far less implications because you're not repaying it. So once you've qualified for a grant, if you've met the conditions, the money comes into your business and that's the end of it. However, with loans and equity, you've got implications. So if your business has a loan, then it will need to be able to generate sufficient profit to cover the interest as well as any agreed repayments of the loan. And that's where we look later at some business planning to ensure before you start that you are going to have enough profit. For that reason, a lot of businesses would prefer to go for an equity investor. So for someone else investing money into your business. So while this would be lower risk in the short term, because part of the business will be owned by the investor, when you do make profits, the investor is going to be taking some of those profits. If the business fails, then with the equity investment, they just lose their investment. But if there are outstanding loans on a failed company, then the company would have to be liquidated by a formal liquidation process. And that is to protect any creditors of the business. So you just have to be aware of that if you're going into this loan situation. So when you're applying for grants or loans or equity investment, you're generally going to have to provide some kind of business plan and cash flow to show the provider of whatever the funding is that your business is eligible and is a proper business, can support profits. So you're likely have to supply a business plan and a cash flow. There are lots of online tools that you can use to assist you with this, or you can use a simple Excel spreadsheet. And at the end of the slides, I've got a simple example of this to show you. And I think it's worth understanding how this works, because yes, the online tools are very good, but in another way, it's good to understand the actual process of what you're doing, if you can. So in order to prepare the business plan, you would need to gather information on your expected sales income as well as your expected costs. And you need these to be based on realistic forecasts in order to be credible. So what I'm saying there is that you can't just pluck a number out of the air. You need to, if you're selling a particular good or delivering a particular service, you need to base it on, I think that I can get this number of customers, and this is the cost price and the selling price, and the number of sales. Some online systems have budgeting tools inbuilt, which can be used to prepare these business forecasts and cash flow forecasts. I haven't particularly covered that today, but it is an area that is available to you. So the next subject is how financial support may affect your choice of business structure. And this is something that we've covered in a lot of the other courses earlier about when you start to trade, should you be a company, should you be a sole trader? what is best, and there's lots of information on that on our other slideshows. So let's say you've started trading, and you may have started as a sole trader or a partnership or an LLP, which is a limited liability partnership, or a company. If you are going to be taking a business loan or using equity investment, it is more likely that a company will be the most appropriate structure. So when I was talking about sole trader, that would be more like a small trader person who's not looking for additional funding. My view is, if you're at the point where you're getting funding, you would want to be a company, because you'd want that limited liability in place to protect you, and the investor would also want that, and it separates the business from you. So that's why it's really important. It provides a limited liability to cover the business in the event of business failure. And it also, another reason is that it allows the equity investment to be appropriately structured. So to split the shares for the future profit between the investor and the business owner, for example. Grants and other financial support are more likely to be appropriate for the smaller sole trader type of business. Staffing and apprenticeships. So if your business needs to employ staff, then one thing you might want to look at is trying to get some government support by taking on an apprentice. You still need to pay the apprentices wages, but they are at apprentice rates which are lower than normal staff rates. Although there are in some areas grants that you can then get to cover the apprentice wages, but that's not across the board. So somehow you're going to have to fund the apprentices' wages. But what you do get funding for is the training costs of the apprentice. And sometimes there is some additional funding that can come in. And again, I've got a link there to a government website that shows you all the information about what funding is available for apprenticeships. Okay, so I'm on the last slide now. I'm not sure if you can all see this, but it's a screenshot here of a very simple business plan. And what it shows is month by month for 12 months, and then full year in the final column. And it's just a simple spreadsheet that I can go through in a moment and show you some changes. But I've put some figures in just for example purposes, and I've put some sales figures in. So this particular business, we're assuming that they're going to generate £1,500 of sales in the first 3 months, and they're going to have an increase to 2,000 in the next 3 months, then to 2,500 in the next 4 months, and then finally up to 2,800 in the last 2 months. So steadily increasing sales. And then looking at the costs, we've got an apprentice wage. We're assuming the apprentice starts 1 month into the trade. We've got a director wage, and we include the director wage as a cost because you need to have some funding for the directors to spend time. It's a low director wage, but it's the sort of basic director wage. I've then included some other costs. Some are monthly, things like office rent, telephone and utilities, and bank charges. And I've also included some startup costs, so things like computer and printer purchase, stationery, which is variable through the year, insurance, accounting fees at the end of the year, and some software. So obviously your business will have its own specific costs, and you need to spend some time thinking about what are all the costs that I need to think about to bring into this spreadsheet, this business plan. So then we total costs for each month, and then we come to a profit figure. And I don't know if you can see my pointer. So here's the profit. And you can see that in the first 3 months, you're making a loss. So what we have to think about is that you're making a loss in the first 3 months, and then you start to make a profit. And overall, this business in the first year is going to make a small profit of £352. But what this business needs is some funding for those 3 months. And by preparing this business plan, you can then identify that you're going to need to get some funding. And it might be the case that as a business owner, you can actually fund that £2,500 of funding that's needed to start up. But let's, for example, say that you have only got £1,500 to put in. So we're going to apply for a grant, and he's applied here for a grant for £1,000. So therefore, at the bottom, I've got my cash flow. So we start with 0 in the bank. We've got 1,000 from the grant, 1,500 from the business owner. And that still means that we're actually going to be a little bit short of money. So you would have to look at how can you fund that? How can you fund that shortfall? Because you're going to be over. So it might be that you apply to the bank for a short-term overdraft. And we can look through month by month on the projection and see, okay, the maximum that overdraft is going to get to is £1,101. So perhaps you try and get a £1,500 temporary overdraft from the bank, as well as a 1,000, or perhaps we need more of a grant. What I'm going to do actually is, let me take that down and let me, say my internet connection is unstable, which is annoying. Katiba, can you see my spreadsheet?
Yeah, I can. Yeah.
Okay. Is that okay? I'm just gonna, I just want to make that bigger. Right, that's better. Can you see that now? So you can see there that my closing balance was negative. Now, what that sort of tells me is that maybe I would actually like to have a grant of £1,500. So if I change that, you can see now.
Sorry,
that helps. And that now, but still, I'm still going to have a small overdraft in May, June, July, and August. So actually, I need a grant of £2,000.
Sorry, Tony, we can't see the.
You can't see that. Okay, I need to go. Let me go new share. Okay, can you see it now?
Yes, I can see it. Yep.
Okay. Sorry, so what I did was the same screen that you saw before. I changed the grant amount, and what I'm trying to demonstrate is that by amending the grant amount, I can now see what level of grant I need to always have enough money in the bank not to go negative. So it's quite a useful tool to see, or you can play around with the grant and the amount invested by the business owner. So now we see that if we don't want an overdraft, we would actually need a grant or a loan of £2,500 for this business. And you can play around with all the figures. I mean, say, for example, you said, no, actually, my sales figures, actually, I think in the first month, I'm only going to make 1,000. You can change that. Say, okay, well, that's still okay at that level. What I've also done here is to show the money being put in by the owner being repaid in the final month as well. So that would be repaid to the owner, but not the grant. I'm just going to undo the changes that I did. Right. Yeah, so that's back to what it originally was. Okay, and so you can see that at the end of the 12 months, what's left in the bank is £1,352, which is the profit plus the grant. In terms of taxation, whether or not the grant is taxable depends on the type of grant, and it depends on the business structure. So it may or may not be taxable. Obviously, a loan would be repayable, so that would not be a relevant question on that. That's pretty much what I have to say. I don't know if anyone has any questions. I might just flick back to the other screen.